Hey everyone, Paul here, and I recently added Wells Fargo to my portfolio. I wanted to talk about why I bought it, what I think the upside could be, and a little background on just the story with the stock about what went wrong and again how they're correcting that. I am managing a portfolio worth over $63,000. Wells Fargo is my eighth largest holding. I've got 100 shares of this as of now, but if there's any kind of more of a dip on this, I'd be looking to add to it. So the current market value is about $3,300. So that being said, let's get into why I own Wells Fargo. Okay, so we have here, I'm comparing Wells Fargo to Bank of America and JP Morgan Chase. And we have Wells Fargo here at the bottom in this kind of darker blue. The lighter blue is going to be JP Morgan Chase, and then the orange here is Bank of America. And over the past 5 years, you can see that Wells Fargo has consistently been underperforming. And if we look down below, we can see that Wells Fargo, has been down over 5 years, close to 32%, while Bank of America and JP Morgan have been well over 100%. So those bank stocks have doubled, and Wells Fargo has been left behind, okay? And again, so in large part to the scandal that they were facing from the cross-selling and opening up customer accounts, right? That being said, let's take a look at the performance in the last year. Well, in the past year, Wells Fargo's down over 30%. Bank of America was down slightly. They were around 4%. JP Morgan was actually up about 2%. But in the last 6 months, what's interesting is that we start to see that Wells Fargo has been trading much closer and much tighter range to Bank of America and JP Morgan Chase. So Wells Fargo is up 34% in the last 6 months versus 26% for Bank of America and about 38% for JP Morgan Chase. Now, on a year-to-date basis, we can actually see when we look just for 2021, Wells Fargo is actually up more than Bank of America and Chase. I mean, it's close, but they're up 12.9% compared to 11.1 and 12.2 for Chase. But again, I think that's a pretty interesting point that they finally have, at least on a year-to-date basis, they've been able to eclipse that performance. So certainly much better than what they've done in the past 5 years. And I think a part of that is the fact that Wells Fargo, again, has been beaten up. They've been, kind of in the public eye with a scandal, for the past several years. But they have a new CEO. They've got a plan in place. And some of the kind of punishments that the government has kind of, rolled out against them, are potentially going to expire or have the potential to within the next year or two, which would be a very positive catalyst. So I think we're entering a phase where Wells Fargo might actually be an attractive bank to own. So Wells Fargo was caught up in a cross-selling scandal where they were opening up customer accounts on their behalf. And the rumblings of this kind of started in 2013, but by around 2015, 2016, it really kind of blew up to be a big deal. And it was in a lot of headlines. You see talking about facing the wrath from regulators. Warren Buffett, a big shareholder, basically came out and said, hey, look, Wells Fargo messed up. And while Warren Buffett does still actually own a big stake in Wells Fargo, he has been trimming that position, and it appears that he's almost looking to, liquidate that over time. We'll see if that actually happens or not. But, there's, again, a lot of reasons why this stock has been unloved, and it has underperformed, the big banks, in the past 5 years as a result of this. So when we look at the impact by customer, so there were about 2 million potentially unauthorized accounts, but only about 115,000 of those actually incurred fees. And those fees, they totaled 2.6 million. That sounds like a lot, but when you break that down per account, it was just $25, and the bank had refunded that. And furthermore, Wells Fargo was basically reporting that, hey, a lot of customers weren't necessarily outraged by this. Right. So really, I think the black eye has been from an investor standpoint more so than from a consumer standpoint. But, it certainly has been, a big deal for them. And I think that, kind of the punishment has been, quite large relative to the crime, not minimizing, what they did wrong and things of that nature. But I think certainly by the steps that they've taken to, put in a new CEO has a really strong track record with Visa and BNY Mellon. I think, again, that, from when he came in 2019, he's taken steps to change the culture. And again, when you take that cultural change combined with the fact that you're looking at, hey, some customers were, potentially, out $25 that they were refunded, right? I mean, so you can start to put that in perspective a little bit more about how bad this was. Let's also take a look at the fines that Wells Fargo has paid as a result of that scandal. So a lot of these fines were paid out in 2018. A lot of these are pretty much behind them as far as what they've paid. But they had a $1 billion settlement with the Consumer Financial Protection Bureau. They had $480 million to settle the securities class action lawsuit over cross-selling. And then in December 2018, they settled with 50 state attorneys general to resolve civil claims for cross-selling. That was $575 million. So in total, it was a little over $2 billion that they paid. But when we look at it, and they have actually been participating in share buybacks. So their shares outstanding today are less than what they were when they paid these fines. But just for perspective, for how much $2 billion is for Wells Fargo, that works out to about 50 cents a share. So $2 billion sounds really huge, but when you kind of boil that down to a per share impact, all these fines were about 50 cents a share. But that being said, one of the bigger punishments that was doled out against them was actually this asset cap. So the Federal Reserve, they took this action where they actually said that they couldn't grow their assets more than essentially $2 trillion, 1.95 trillion. So that capped how much they were able to grow. But again, this took place in early 2018. And now that we're in 2021, the fact that we do actually have their new CEO who came in 2019, I think that he's starting to stabilize things. They're starting to change the culture. And that one of the big positive catalysts that is out there for Wells Fargo is the removal of this asset cap. But it's also kind of interesting to keep in mind that even with this asset cap, Wells Fargo is still actually paying a dividend. It's a smaller dividend today. We'll get into that, but they're still paying a dividend. They're still making money. It's just that they'd be able to be much better off and be able to grow much faster if this asset cap was removed. So again, currently profitable, but certainly could be a positive catalyst if they can get this taken care of. All right, now let's take a look at their quarterly financials. So if we look at their net interest income, it has been much lower in 2020. So it was, consistently over, 11 billion. It's been under 10 billion, for the June, September, and December quarter. And, when we think about that, that's in large part a function of the interest rates. So interest rates were much lower, which just has resulted in a lower net interest income. So the bigger the interest rate, the more room there is for margin for banks, all banks, generally speaking. So that has been a headwind, but we also have to think about it that rates being low now, could represent a good time to start getting into some banks. There's certainly some banks that even have more upside because a lot of banks have rallied a lot in the last 6 months. So banks out there like Wells Fargo that have been left behind a little bit could still be a good play. But I think that when we look over the next, few years, there certainly is the potential for rates to move higher, which would be better for Wells Fargo's net income, in addition to the asset cap being lifted. And we come down here, we can also take a look at the dividends that were being paid here. So their dividend was actually up to 51 cents, in the June quarter. That was cut down to 10 cents per share. It still was a positive that they're paying a dividend at all. And if we look at the dividend yield at 10 cents a share, so 40 cents a year, that would be about 1.2% with the current share price. And then if we look at it, though, from what they were paying with that 51 cents, at the 51 cents saying that, they would have, $2.04, that would be about a 6.1% based on today's cost basis if you get that. So if Wells Fargo, you buy it today and they were able to kind of return to that dividend being paid, there's the potential to be getting some pretty good dividend yields down the line, right? Because I think it's always interesting to be thinking about the dividend yields in terms of the cost basis as opposed to just the share price, right? So something to keep in mind. They're currently paying that dividend. Reason to believe that this could be gradually uplifted, but again, if in the next 3, 4, 5 years, if they're able to return that 51 cents, you could be getting a very good future return from that standpoint as well. And finally, I think a lot of people out there, from what I can tell as far as message boards and things of that nature, I'm kind of just hearing a general framework that says, I'll wait to buy Wells Fargo when the asset cap is removed, when there's limitations and regulations are kind of taken out. So I think there's a lot of buyers on the sidelines that would want to be in this stock that are waiting for things to kind of fall into place. But I think that from an investor standpoint, that you want to buy them before the event happens, because then the share price could be a lot higher. And I also think the downside for Wells Fargo is pretty limited. I think that there's not a lot of downside. I think there's a lot of things that could be really a positive catalyst driving this higher. And so I like that risk-reward ratio. I like kind of the story with it, but I like looking for things that are a little bit unloved, that might be, more unloved than what is deserved. I think Wells Fargo is a good candidate for that. This is something I'm going to continue to monitor in the quarters ahead. So if you're interested in seeing those updates and other stock analysis, love it if you could subscribe to this channel. Thanks so much for watching, and I'll talk to you guys next time.